good morning, investors and corporate. Welcome to SET Digital Roadshow Third Quarter 2023 Performance Review. This section will run about 45 minutes, including Q&A. Company will start the section by 30-minute presentation, followed by 15-minute Q&A. And during Q&A, investor may leave your question in meeting room chat box or use raise your hand function. We will open your microphone so you can ask the questions to the company directly. So may I now invite to Thai Oil Public Company Limited to start the presentation, please. Thank you very much.
Good morning and thank you all for joining Q3 and 9-month 2023 SET Digital Roadshow today. Before we start the presentation, let me introduce management and IR team joining today. First, คุณทอแสงชัยประวัติ VP of Financial Planning. Second, คุณชัยรัตน์อารัญยสทัศน์ Manager of Chemical Value Chain Analytics. And me, ปิยธิดา พรประดิษฐ์ Assistant Manager of IR. And we also have IR team to support us today. Then let's start with the first agenda, which is the key highlight by คุณทอแสง. Please, คุณทอแสงค่ะ.
Thank you, Khun Piyatida. Good morning, everyone. Let me start with the key highlights of the company. Gross refinery margin and gross integrated margin of Thai Oil has been at a decent level this year, especially in the third quarter, due to limited supply from refinery outages. Gasoline and gas oil demand has already recovered to pre-COVID level, while jet demand continues to rise following the increasing international flights. We expect jet demand to recover back to the pre-COVID level by next year. In addition, higher demand and tight supply also caused global middle distillate inventory to remain below 5-year average level, while gasoline inventory is still tracking 5-year average. On the crude oil side, crude balance had remained deficit since the third quarter, driven by Saudi Arabia production cut and Russia export cut, while Israel-Hamas conflict has created more concern on potential crude supply disruption, especially if the Strait of Hormuz is closed. As a result, crude prices has been trading at a relatively high level, ranging between $80 to $90 per barrel in the third quarter, while Melbourne OSP are softened to $1.8 per barrel from higher U.S. crude supply. At the same time, Singapore GRM remains at a strong level, averaging around $9.5 per barrel in the third quarter, from sharp rise in product crack spreads as a result of the tight product supply. As for the key performance highlights, from supporting market factors, Thai Oil reported market GRM in the third quarter of $12.4 per barrel, $7.9 per barrel increase Q-on-Q from higher crack spreads on all products. With $9 increase in crude oil price Q-on-Q, Thai Oil has stock gain of $9.8 per barrel and reported accounting GRM at $22 per barrel. For aromatics and LAB, with lower PX and benzene margin from new additional capacity, GIM contribution from aromatics and LAB in the third quarter was lower at $0.7 per barrel compared to $0.9 per barrel in the second quarter. As for the GIM contribution from base oil, also declined to $0.5 per barrel from $0.8 in the second quarter, from softer oil, base oil and bitumen spread during the rainy season. In summary, Thai Oil reported market GIM at $13.6 per barrel and accounting GIM including stock gain at $23.3 per barrel in the third quarter, a significant increase Q-on-Q, while reported a 9-month accounting GIM at a relatively strong level of $12 per barrel. As a result, for the third quarter, Thai Oil reported a net profit of 10.8 billion Thai baht, of which 92% of the net operating profit is contributed from the refinery and lube business. More financial performance detail is in the next part. For the business highlights, Thai Oil continues on our operational excellence to capitalize on improved market condition. On operations side, in the third quarter, refinery run rate dropped slightly to 110% due to an oil spill incident in September. But due to our prompt response, we were able to contain the situation and brought the refinery run rate back to 113 in more than 110% in the fourth quarter. Aromatics run rate was at 74% from lower aromatics margin, but we reoptimized to produce more gasoline. We continue to run LAB at a maximum of 123% and ran base oil at optimal level of 79% utilization rate. We increased our jet production yield to 18% from 14% last year, following higher jet demand in the region. On crude optimization, we processed 90% from Middle East crude as it used the most middle distillate, capture higher jet and gas oil demand, while maximizing domestic and Indochina sale at 85% and 11% respectively to capture higher regional demand. On the financial side, we continue to enhance on the cost management through Orchestra Plus program. With a strong first half performance, Thai Oil paid interim dividend of 0.65 baht per share, or a payout ratio of 40% on the 22nd of September this year. An update on our strategy side, we have solid progress on our 3V strategy to transform our business portfolio to become a sustainable energy and chemical company. For our first strategy, value maximization, our key greenfield project progress at the end of the third quarter was at 94%. The last CFP module was transferred to the site for installation last month. We plan to commercially operate the first unit, HGS4, by early 2024, and the full commercialization of CFP is expected in 2025. For our olefin investment in Chandra Asri, CAP is preparing for the upcoming final investment decision or FID of chlor-alkali and ethylene dichloride project, which is a new high-value product to enhance its ethylene value chain. The FID is expected next year. For our second strategy, value enhancement, our Topnext company, international marketing arm of Thai Oil, continue to on the market expansion in three target countries, including Vietnam, Indonesia, and India. We recently FID new chemical tanks in the North Vietnam terminal to expand on product diversity to customers and also exploring new potential partnership in India. And for our third strategy, value diversification, we continue on our market study of high value business in disinfectant and surfactant sector, which Thai Oil see high market growth and also strategic fit with our current business. At the same time, we collaborate with PTT Group on the study of new energy project, including biojet, green hydrogen, and carbon capture utilization and storage. And last but not least, we would like to update you on the oil spill incident. On the 3rd of September, approximately 60,000 liters of oil spill was found around our offshore crude receiving facility, what we call SBM2. The company has taken immediate action to contain the oil spill using oil booms and dispersion and promptly established emergency control center. Within 3 days, oil spill was successfully resolved and there were no remaining residue around the area. The incident has impacted on our utilization rate as we need to switch from using SBM2 to SBM1, a smaller size of crude receiving facility. Nevertheless, we were able to bring back the utilization rate to the normal level of 110% within 2 weeks. On financial side, Thai Oil booked expenses in the third quarter around 155 million baht, covering cleanup costs and potential compensation to local community. Total expenses is still under inspection. We do have several insurance companies to cover potential costs arising from the incident, including all risks, insurance, both property damage and business continuity. We have marine cargo insurance, pollution legal liability, and third-party liability insurance. We also emphasize on ESG management and response. On the environmental side, we collaborate with the government agencies to conduct environmental impact studies and develop environmental restoration projects as required. On the social and governance side, we engage in discussion to gather concerns from the community and establish fair and reasonable assistance criteria to take care of those who are impacted. This is the highlight part, and next, Kun Piyatida will present on our financial performance.
Thank you, Kun Tho Sang. Let's start with the financial performance. The net profit in Q3 was about 10.8 billion Thai baht, which much higher from the previous quarter due to stronger net operating profit from refinery business. And we also report the gain from stock gain and write down inventory on crude and product inventory, about 7.9 billion Thai baht. However, we also booked some loss, about 7.6 billion Thai baht from other items. And for the 9 months, we report a net profit about 16.5 billion Thai baht. In terms of the contribution, you can see that the majority of our contribution came from petroleum and lube business unit, which accounted for about 19%. And let's move to each business unit, starting with the refinery business. Our refinery run rate remained high at around 110% and still above other refinery run rate. But it softened slightly from Q2 due to the oil spill incident in September. And the high refinery run rate was to support domestic demand, which increased about 3.2% year-on-year, mainly from jet and more gas demand. And for Thai oil, we continue to maximize domestic sales. In Q3, we sold to domestic about 85%, which higher than other domestic refinery. And the remaining of 15% was for export, mainly to CRMV countries, which about 11%, and for other countries about 4%, which is for Singapore. And let's move to aromatics business. The contribution from aromatic business was softer from 0.9 to 0.7 dollar per barrel due to lower PX and benzene spread due to higher feedstock costs. And for the base oil business unit, the contribution was softer from 0.8 to 0.5 dollar per barrel due to softer base oil bitumen spread due to weak demand during rainy seasons. So if we combine our team and business unit together, we report market GIM in Q3 at 13.6 dollar per barrel. And if we combine the market GIM with the stock gain, we report the accounting GIM at 23.3 dollars per barrel. And that's all for the margin side. Let's move to the cost side on the right-hand side. As Thai oil, we continue to enhance our cost management. So we continue to have low operating costs. In Q3, we report refinery cash costs at 2.1 dollar per barrel and the group cash costs at 2.5 dollar per barrel, where the 2.5 came from operating costs about 1.8 and interest expense about 0.7. And we also have the depreciation cost about 1.2 dollar per barrel on the top of this graph. And then let's move to the power business. For the power business, we have the contribution from top SPP and GPSC. Let's start with the top SPP. The top SPP EBITDA was softer in Q3 from lower selling price resulting from a decline in natural gas price. However, the net profit was higher from Q2 as there was no refinancing cost, unlike in Q2 that top SPP incurred loss about 200 million Thai baht. Besides, we also booked dividend income of about 85 million Thai baht from GPSC. So if we combine the contribution from both company, we will have net profit about 567 million Thai baht. And for the olefin business, the contribution was softer as we recognize loss about $3.4 million due to weak olefin market from ample supply. And let's move to the solvent business. For the solvent business, the production rate increased following higher demand. This also leads to higher EBITDA and net profit contribution. In Q3, the net profit of solvent business was 177 million Thai baht. And for the ethanol business, utilization rate went up to 98%, increased from previous quarter as there was a maintenance shutdown in Q2. As a result, EBITDA increased to about 30 million Thai baht from 1 million Thai baht in Q2. However, the net profit contribution declined as Thai Oil Ethanol did not receive the dividend income from the UBE. Then let's move to the consolidated financial performance. If we combine our business together, so starting with the sales revenue that increased Q-on-Q due to higher crude oil price, and the EBITDA and net profit increased mainly due to stronger refinery business unit and stock gain. However, if we look at the 9 months, the EBITDA and net profit was softer as there was no gain from GPSC share sales like last year. And for consolidated cash flow, our cash and short-term investment as of 30 of September remain healthy at 37 billion Thai baht, which lower than the end of previous quarter. And this combining of the cash inflow from operating activity about 20 billion Thai baht and cash outflow for investing activity about 7.4 billion Thai baht. This is mainly for the CFP project. And we also have the cash outflow for financing activity about 20 billion Thai baht. This is mainly due to the net cash paid to financial institution, which is the loan repayment. And then let's move to the financial position. Our asset decreased from the December last year, mainly due to the drop in current asset resulting from the lower trade receivable, tracking the lower crude oil price. And for the debt and equity side, the total liability went down primarily due to lower current liability from lower crude oil price. And for the long-term debt, it declined from the debenture repayment of $500 million. And in terms of the cost of fund, 66% of our debt was in US dollar and the rest is in Thai baht. And most of them was fixed rate, which accounted for about 79%. And for the key financial ratio, net debt per EBITDA is 3.9 times, and the net debt per equity remain low, below 1 time. And for the credit rating, we are still placed in the investment grade. And that's all for the performance highlight. Let me hand over to คุณ Chairat for market outlook ค่ะ
Okay, let me start for the market outlook. We shall start for the supply side first of the crude oil. For this picture, we can see that for the picture A, we can see that the supply from non-OPEC, especially from US, shall be increased for the next year. And when we offset with the picture B for the OPEC plus, that we expect that we may have some cut production for the next year. Then we offset together the picture and the picture B. We can see that for the next year, the supply side shall be increased around 0.9 up to 1 million barrels per day. And then we move for the next slide. For this slide, we can see that for the demand side. For the demand side, we expect that for all analysts, they comment that the demand shall increase around 1.3 up to 2.2 million barrels per day. That shall increase a lot for the next year, and the demand side shall be past the pre-COVID level. Then we combine together of the supply side and the demand side in the right-hand side. We can see that for the next year, we may have a more balance of the crude oil demand and supply. Okay, next slide. For this slide, we can see that for the GRM margin, okay, for this year, stay at high level as well, around $6.8 per barrel. That shall higher than the pre-COVID level a lot. But okay, anyway, for the next year, we need to carefully check for the highlight. The first one for the demand side, especially for the traveling demand, shall be increased, and for the supply side as well for the new capacity wise shall be add a lot. Okay, for the demand side, for picture A, we can see that all of the oil demand for the next year shall be a little bit increased, especially for the JA1 shall increase a lot. For the picture B, we can see that at this moment for the commercial flight of the world increase a lot and shall be surpassed for the pre-COVID level. But anyway, when we check for the inventory, we can see that at this moment the inventory of the business is quite low. That shall happen if something happen to the market. The tax rate for the business shall be increased a lot, especially during the winter season. For the next slide. Yeah, for this slide, we can see that for the new capacity addition for the next year, many people, they try to concentrate for the big capacity addition in Nigeria. We may have the Dangote, 650 KBD of the refinery. This is really huge capacity coming into the market for the next year in Q2. But anyway, many people, they try to check whether this project shall be delayed or maybe they may have some experience for the startup or not. Something look like the outsource in Kuwait right now. They try to restart up, but anyway, at this moment, they still cannot run at the full capacity. And this may happen to the Nigeria refinery or not for the next year. Let me carefully monitor for the next year. Okay, let me move for the next slide. For this slide, we can see that the petrochemical wise, such as the PX and benzene, for this year, we have a lot of the capacity addition coming into the market, especially from the China. That shall lead some pressure to the aromatic market. But anyway, for the next year, the additional capacity coming to the market shall be lower than the past. Then we suspect that the demand shall be increased and the market of the aromatic wise shall be improved as well. Okay, let me move for the olefin. For the olefin wise, for both high dent and PP, we can see that we still have some actual capacity coming to the market a lot, especially for the PP. It means that for the olefin wise, for the next year, we may encounter some supply increase a lot in the next year. That shall maybe pressure for the olefin market. And for the last one, for the base oil and bitumen, for this slide, for the base oil and bitumen, for the base oil wise, for the next year, we may have a lot of the Group 2 and Group 3 new capacity coming to the market that may pressure for the base oil market. But anyway, for the bitumen wise, we can see that the bitumen wise, especially in Thailand, we may have a lot of the new investment for the road paving activities that shall may support for the bitumen market. Okay, let me conclude for all outlook. For the crude oil wise, we can see that we may have a steady oil market for the next year, because we may have a high demand anyway, but we may have the new supply as well from the USA. And for the refinery side, the margin quite be normalized, but anyway, the margin shall be higher than the pre-COVID level. But for the aromatic side, we suspect that the market shall be a little bit improved for the next year because we have a lower capacity addition. But anyway, for the olefins, for next year still be the challenge year as well, because we still have a lot of the new capacity addition coming to the market. But for the base oil wine shall be softer due to the group 2 and group 3 capacity addition in the market. That's all for our conclusion ครับ
On the final remarks, let us share with you on our strategic direction for this decade. On the market outlook side, for the second half of this decade, we expect a golden era for the refinery and recover cycle of the petrochemical. As you can see on this chart on the left, we do not expect a lot of the new additional capacity on the refinery side in the second half of this decade, while the demand growth is still exceeding the new capacity. Therefore, we expect a strong refinery margin to continue in the second half of this decade, which will coincide with our CFP project completion. At the same time, on the petrochemical side, we expect the petrochemical cycle to recover around middle of this decade in 2025-2026, given that we do not see a lot of new capacity in the second half of this decade. Therefore, we see positive outlook for the petrochemical, both aromatics and olefins. As a result of quite a good outlook, and also together with the global mega trend of the climate change, net zero drive, together with energy transition, changing consumer behavior and demographic shift, Thai Oil has set a new business aspiration target for the year 2030 to transform our portfolio from today that 66% come from petroleum business and 15% from petrochemical, remaining 19% come from power and other business. We would like to transform our portfolio to become on the right that petroleum and high value product will contribute net profit around 45%. We will increase our petrochemical to 30% from our investment in Chandra RC and further high value product and high value business as well. 20% will come from the high value business in that I mentioned earlier in the disinfectant and surfactant business and other new S-curve in the new energy business. And the last 5% will come from our business as income stability. So this is our great future aspiration for the year 2030.
Okay, the session has come to an end. So on behalf of the Stock Exchange of Thailand, I would like to thank you investors and corporate for joining the conference. We look forward to welcome you all again in the next quarter. Thank you very much and have a good day. ขอบคุณค่ะ